So what do you think? You have your terminal up and running too.
Yeah, indeed. The GDP growth is a big miss, but we always know there is a margin of uncertainty, let's put it that way, around such number. But this number basically means, this year, something 5% growth is out of water, 4% is still very challenging. You need a very, very strong recovery in the second half to hit 4 for this year.
Could we get that because of pent-up demand and the like, though? Do you think it's feasible? Or do you think that this number really kicks those targets out of the park entirely?
To us, the most important factor outside of the zero COVID situation is actually the housing. As you actually already mentioned, the housing right now is in a pretty dire situation. And if we don't have a strong recovery in the housing sales from here onwards, that's going to be a challenge.
And that seems to be, well, I wouldn't say completely out of the control, because there are things that they can do and announce, and maybe they can even take over some of these projects, right? But that's a very big exercise to undertake, right? Now, what do you make of this? Let's start with the mortgage situation.
Well, that just highlights, the housing was already in a very bad place, even before the Shanghai lockdown, right? The developers already in, very big cash flow problem.
Right.
And everything, the lockdown just made it worse because it really hit the household confidence. And that's something hard to control for the government.
Yeah, and we look here at, residential property sales down 31.8%. We're looking at fixed, we're looking at also property investment year to date, year on year. We're looking for a contraction of 4.2%. We've got even worse than that, a read of minus 5.4% here too.
Yeah.
And that goes to what you're talking about.
Yeah, indeed. I mean, so far they have thrown a lot of money at the infrastructure, right? That's easy to come back. That's always, less of a concern. But if you only have infrastructure, it's not enough. You need housing to really turn the economy around. But housing is not something the government can fully control because there is the household confidence here, which is really being hurt by the entire situation. So basically, we need still a lot more support from the government to improve the housing sector.
Well, in what form would that come? Because I think a few days ago, just this week, the PBOC held that first half briefing, right? And they said liquidity ample, and you look at interbank rates, they're not wrong. They're very, very low.
Yeah, true.
So how do we get that to where it's needed?
Okay, I think the housing problem is some sort of part of the long-term structural issue of too much debt, right? So essentially, to really get out of the situation, China needs a proper debt restructuring. All of the sector, all of the banking, so they need to clean up. Because if you have all these debt issue, defaulting, lingering in the background, things cannot move ahead.
Well, this is it, isn't it? I mean, would anybody want to buy a house at the moment if you've got a declining market? I mean, it's the same as deflation. You don't buy today, you wait for it to go down further. And that's the thing, because there's so much noise there. And as you say, it's so important because it's about 25, 27% of GDP.
Yeah, it's not just declining market, it's that you pay for something, you don't get it. That's even worse.
That's, yep.
Right? So the concern here is we get a vicious circle. Households, their confidence get hit and they don't pay, they stop buying or even, cut down the buying of pre-sale properties, and that hurts developers even more. So you can see how that goes. But let's see, I think the government realized the gravity of the situation and they're trying to take some action. Yeah.
Let's look at the drivers of growth that we have so far. And the trade numbers this week, I mean, 100 billion is the surplus already year to date. That's a big surplus. What does it mean for the currency? And what engine of growth does that provide then? To say 3.5% growth target, for example. 3.5% growth.
Right, so the trade has been super helpful so far.
Okay.
And the fact that, we got another month of strong export growth just showed, there is almost no lasting disruption to the global supply chain from China. But that also highlights the challenge in the second half, because it means the growth still very much rely on the external demand, but we all know the external demand, I guess it's a consensus now, is going to slow down quite significantly because all the energy issue and other issues and monetary policy tightening in the West. So that means the domestic demand needs to step up even more to fill the gap here, right? And we have some positive signs here, but that is not enough. And again, back to the point that the government needs to provide more support.
Well, we saw what they were doing just about a week ago, where they were trying to borrow money in order to shore up these municipal authorities, because they have a real shortfall because of the property market. They can't sell land, which is one of their main revenue generators. Does that, I mean, how bad is the debt situation now if we take everything into consideration?
It's not good. It's definitely not good. We've known this problem for a long time. You know, housing leverage too high, infrastructure, local governments leverage too high. Before the pandemic hit, the government was almost on a good path to start addressing this issue. But the pandemic disrupted the whole thing, and now they have to use leverage again to support the economy. So, as I mentioned earlier, I think at this point, actually, debt restructuring, bank recapitalization may be as important as stimulus to the economy.
And where do they get the funding for the aggregate financing numbers that we got just for June? You had a very big bump in government bond issuance.
Yes.
Does that continue? Is that where they're going to get funding? Apart from, of course, the special governments, which is outside that.
That helps. But to our mind, we think actually what's needed even more here is for the central government to step up. They need to leverage up the central government balance sheet, right? You look at the central government debt, CGBs is only 20% of the economy. It's actually pretty low. They have scope here. And per the point about local governments, they have their fiscal position that weakened so much by the zero COVID lockdowns. So central governments need to chip in, and things like issuing special CGBs or even expanding the on-budget deficit. We think it could be quite likely in the second half, given the pressure on the growth.
Very final question, I guess, on that note. Have we seen, from mid-year up until the end of the year, have we seen them change their tact on what the budget deficit target's going to be? Have we seen them change their official forecast? I can't seem to remember the last time that they've changed the target that they set in March.
Yeah, I'm with you. I don't think there was a case before.
Okay.
That shows, there is a lot of kind of ingrained fiscal conservatism from the central government side. They need to overcome that hesitation. But again, if pressure on the economy builds up further, I think the hesitation will melt.
If there's a time for that, as you point out, it's probably now.
Yeah.
Wei Yao, thank you so much.